Hello, everyone, and welcome to the recording of QC 1000 virtual workshop. My name is Ekaterina Dizna. I'm from the Office of the Chief Auditor, and I'm joined today by my OCA colleagues, David Elam and Lynette Kleindienst. Before we get started, I'll state our standard disclaimer. The views expressed are offered in our capacity as a staff of the PCAOB's Office of the Chief Auditor, but they are our own and do not necessarily reflect the views of the board as a whole and individual board members or other PCAOB staff. A little bit about this QC workshop. Early in 2025, we hosted two in-person workshops in Washington, D.C. and Irving, Texas. To reach a broader audience, we decided to convert in-person workshop into two virtual workshops. Part 1 and Part 2 were hosted during the summer of 2025 and covered the same agenda topics as presented during the in-person workshops. Today's session is focused on Part 2 virtual session, and it will be posted on our QC implementation page, along with links to the QC Workshop Handbook. The QC Workshop Handbook includes the presentation materials and various activities. The PowerPoint slides developed for the workshop and presented in QC Workshop Handbook summarize the content of QC 1000. It is important to refer to the full text of QC 1000 when implementing the standard. Additionally, please note that all examples and scenarios developed for the workshop are intended to provide a general understanding of QC 1000 and do not constitute legal interpretation or advice. The facts presented are partial, and conclusions will be affected by all the facts and circumstances in an individual case. In other words, you may see a familiar scenario, but you may also have additional facts that apply to this scenario, and those additional facts that are specific to your firm may change the conclusion. A final reminder, if you're watching the recorded version of this workshop, when we reach an activity, feel free to pause the video and complete the activity on your own. Then resume the video when you're ready to hear the debrief. This will allow you to work on your own and see how your responses compare. So here's a quick look at what we will be covering today. We will revisit a few of the definitions from the prior session, that is session 1 of the virtual workshop. The majority part of the workshop will be focused on the monitoring and remediation process. We will not only talk about the requirements of the monitoring and remediation process, but we will also work through the activities designed to help you understand them. We'll spend some time on evaluation of QC system and wrap up this workshop with the documentation requirements. As a reminder, today is the second session. The first session was recorded separately with additional content. And session 1 covered topics like QC 1000 foundations, the firm's risk assessment process, QC system components that address aspects of the firm's organization and operations. Okay, so let's revisit some of the definitions from session 1. Let's start with the objective, which is in paragraph 5 of the standard. QC 1000 specifies that an effective QC system provides a firm with reasonable assurance that the firm, each member of firm personnel, and each other participant conduct each of the firm's engagements and fulfill their other responsibilities that are part of or subject to the firm's QC system in accordance with applicable professional and legal requirements. And each engagement report issued by the firm is in accordance with applicable professional and legal requirements. So a couple of key terms that I would like to revisit. First, engagement. So engagement is a defined term under QC 1000 in paragraph A3 of Appendix A. It is defined as any audit, attestation, review, or other engagement performed under PCAOB standards led by a firm, or in which a firm's played a substantial role in the preparation or furnishing of an audit report as defined in PCAOB Rule 1001, parallel I2. The next term that I would like to remind you about is applicable professional and legal requirements, or APLR. We will be using APLR throughout the session. So when you hear David or Lynette saying APLR, just want you to remember that it's APLR stands for Applicable Professional and Legal Requirements. Again, it's a defined term in paragraph A2 of Appendix A. It includes professional standards as defined by PCAOB and rules of the PCAOB that are not professional standards. It also includes, to the extent related to the obligations and responsibilities of accountants or auditors in the context of engagement or in relation to the QC system, rules of the SEC, other provisions of U.S. federal securities laws, ethics laws, and regulations, and other applicable statutory, regulatory, and other legal requirements. To be clear, it's not every statutory, regulatory, and other legal requirement, but only those that relate to the obligations and responsibilities of accountants or auditors in the conduct of engagements or in relation to the QC system. Requirements like rules of the SEC that do not relate to obligations and responsibilities of accountants or auditors do not fall within the definition of applicable professional and legal requirements. The concept of reasonable assurance is consistent with QC 20, which is the board's quality control standard currently in place. In the reasonable assurance objective, QC 1000 explicitly mentions the firm, its personnel, and other participants. So I'd like to revisit some of these terms on the next slide. So let's start with firm personnel. It is a defined term in paragraph A5 of Appendix A of QC 1000. Firm personnel are defined as individual proprietors, partners, shareholders, members or other principals, accountants, and professional staff of a registered public accounting firm whose responsibilities include assisting with 1, the performance of the firm's engagements, or 2, the design, implementation, or operation of the firm's QC system, including engagement quality reviews. Professional staff includes employees as well as individuals such as non-employee contractors and consultants who work under the firm's supervision or direction and control and function as the firm's employees. These individuals include, for example, secondees and lead staff who work under the supervision or direction and control of the firm. Professional staff does not include persons engaged only in clerical or ministerial tasks. So the adopting release on page 51 provides some examples of firm personnel. Next, I want to talk about other participants. So if an individual does not fit the definition of firm personnel, they may be considered other participants. Other participants are defined in paragraph A7 in Appendix A to QC 1000. As accounting firms, foreign or domestic, registered or unregistered, accountants, and other professionals or organizations other than firm personnel, whose responsibilities include assisting with 1, the performance of the firm's engagements, or 2, the design, implementation, or operation of the firm's QC system, including engagement quality reviews. The adopting release on page 51 also provides some examples of other participants. Okay, so let's also briefly revisit the structure of QC 1000. QC 1000 shares the same basic structure as other quality management standards, including the same 8 components, a risk-based approach to quality control, assignment of individual to be ultimately responsible and accountable for the QC system as a whole, assignment of individuals to 3 roles of operational responsibility that are substantially the same, many of the same quality objectives, and many of the same specified quality responses. So if your firm is subject to the requirements of other QM standards, you do not need to maintain separate QC systems. So one for QC 1000 and another one for ISQM1 or SQMS1. Firms can develop a single QC system for their entire practice that satisfies PCAOB requirements and the requirements of other professional standards to which the firm is subject. While QC 1000 has certain additional and more stringent requirements, firms can integrate this into their unified QC system, eliminating the need for multiple systems. Many of the same policies and procedures developed under another quality management standard will also be applicable for QC 1000. I will now turn over to David and Lynette to discuss monitoring and remediation.
Thanks, Ekaterina. Hello, everyone. My name is David Ellen, and I'm joined by my colleague, Lynette Kleindienst, and we are pleased to walk you through the monitoring and remediation process during today's workshop. So the way this session will work is that we have several slides of presentation where we'll talk about the requirements of the standard, and then we'll turn to an activity to put into practice what we've just discussed. Related to the monitoring and remediation process and the evaluation of the QC system in particular, I want to remind everyone and emphasize that there are differences in defined terms, concepts, and requirements of QC 1000 and other quality management standards, and we will not be discussing those differences at this workshop. So with that, I'll turn it over to Lynette for an overview of the monitoring and remediation process.
Thank you, David. The monitoring and remediation process applies to the design, implementation, and operation of all QC system components, including the monitoring and remediation component, and provides the basis for a firm's evaluation of whether its QC system is effective and for reporting on the QC system. This graphic illustrates the steps of the monitoring and remediation process under QC 1000. So let's start with designing and performing activities to monitor engagements in the QC system. QC 1000 requires that the firm's QC system includes both engagement monitoring activities and QC system level monitoring activities. The two types of activities provide different kinds of information, and a firm needs to perform both to have a reasonable basis for detecting engagement and QC deficiencies and evaluating its QC system. Engagement monitoring activities are monitoring procedures performed on engagements, including in-process and completed engagements. QC system level monitoring activities are monitoring procedures performed on aspects of a firm's QC system, including the firm's risk assessment process and monitoring and remediation process. We'll briefly discuss each step of the process next. Before we go into that, I want to make an important overarching point, and one that firms need to consider when designing their monitoring activities. Generally, individuals cannot perform monitoring activities over their own work. Unlike QC30, self-monitoring is not permitted within the firm's monitoring and remediation process. That is, individuals are not permitted to perform monitoring procedures over the same areas for which they are responsible. The firm may have to contract with another individual or service provider to perform the monitoring work, while firm personnel can have the role of operational responsibility over M&R. This is similar to how smaller firms may operate now in obtaining an EQR for its engagements. As a reminder, if a firm seeks assistance from other participants in performing their QC-related activities, the firm is ultimately responsible for its QC system. To the extent that a firm uses other participants in the design, implementation, or operation of its QC system, there are a number of quality objectives that would need to be established and met by the firm relating to their use of the other participants. Okay, let's talk a bit more about a firm's engagement monitoring activities. QC 1000 includes requirements related to monitoring activities over completed engagements, in-process engagements, and engagements performed at a level below a substantial role. Some of these requirements vary based on the size of the firm. In determining the nature, timing, and extent of engagement monitoring activities, including which completed or in-process engagements to select for monitoring, the firm should take into account the factors in paragraph 64 of QC 1000. Let's discuss each type of engagement that the firm performs engagement monitoring activities over. First, for completed engagements, firms are required to incorporate a level of unpredictability in their selection and monitoring of completed engagements. For example, which engagement would be selected, which areas within the engagement would be selected, or when an engagement would be selected. And the firm is only required to incorporate a level of unpredictability that achieves at least one of those approaches. Next, let's talk about in-process engagement monitoring. Firms with larger PCAOB audit practices are required to monitor in-process engagements, and all other firms are required to consider doing so and may determine, in light of their assessed quality risks, that in-process monitoring is a necessary or appropriate part of their QC system. Last, and similarly, all firms that participate at a level below a substantial role in another firm's engagements should consider performing monitoring activities over such work and determine whether it's appropriate to do so given the firm's particular facts and circumstances. There are factors in paragraph 64 of QC 1000 that a firm is required to take into account when determining the nature, timing, and extent of its engagement monitoring activities. However, a firm will need to tailor its monitoring activities to address the particular circumstances of the firm and select engagements for monitoring based upon their specific risks. So, as I mentioned on the previous slide, one element of the requirement to monitor completed engagements is that firms inspect at least one completed engagement for each engagement partner over a cyclical period. I want to highlight some important elements related specifically to the cyclical period that a firm uses to inspect engagement partners. First, firms can choose any cyclical period, but if they adopt a cycle longer than 3 years, they are required to demonstrate how that cycle is adequate to provide a reasonable basis for detecting engagement deficiencies and QC deficiencies. Second, the cyclical period chosen by the firm should take into account the factors in paragraph 64 of QC 1000. For example, the results of previous monitoring activities undertaken by the firm, or information obtained from oversight activities by regulators, other external inspections, or peer reviews. And third, regardless of the cyclical period used by the firm, risks or other circumstances related to an engagement or an engagement partner may trigger the need for the firm to inspect an engagement partner's completed engagements more than once during the cyclical period. Firms can have different internal inspection cycles for different groups of engagement partners. For example, a firm may choose to inspect completed engagements for all new partners within 2 years of their admission, while applying a different cycle for more experienced partners. Similarly, a firm may choose to inspect engagements for partners who consistently demonstrate strong results from the internal and external inspection of their work on a longer cyclical basis. Importantly, QC 1000 does not mandate a change to a firm's existing internal inspection cycle if it is longer than 3 years, so long as the firm is able to demonstrate how that cycle is adequate to provide the firm with a reasonable basis for detecting engagement deficiencies and QC deficiencies. Okay, let's do a polling question. QC 1000 paragraph 62B requires a firm to change its existing engagement partner monitoring cycle to 3 years. Is this true or false? The correct answer is false. QC 1000 does not mandate a firm to change its existing engagement partner monitoring cycle if that cycle is adequate to provide a reasonable basis for detecting engagement and QC deficiencies. Therefore, firms may continue using their existing cycles, even if they are longer than 3 years, so long as they can support their adequacy under the standard. There is no requirement to change the existing cycle to 3 years or less if the existing cycle provides the firm with a reasonable basis for detecting engagement and QC deficiencies. Let's do one more. Which considerations apply when deciding on the length of the engagement partner monitoring cycle? A firm may take into account the results of the previous monitoring activities. B, information obtained from oversight activities by regulators, other external inspections or reviews. C, the firm may also evaluate the characteristics of particular engagements, such as the industry and the type of engagement. And finally, D, firms can have different engagement monitoring cycles for different groups of engagement partners. The answer to this question is A, B, C, and D. All considerations apply. A firm may take into account the results of the previous monitoring activities when deciding the length of the engagement partner monitoring cycle. There is factors in QC 1000 paragraph 64 that address the nature, timing, and extent and results of previous monitoring activities undertaken by the firm, including from inspections of completed engagements, monitoring of in-process engagements, monitoring of work performed on other firms' engagements, and QC system level monitoring activities. Information obtained from oversight activities by regulators, other external inspections, or reviews may also be relevant. While the firm cannot rely solely on monitoring activities performed by others, such as network activities, regulatory inspections, or peer reviews, in lieu of performing its own engagement monitoring activities, the firm can use the results of those activities in determining the engagement monitoring cycle. Firms may also evaluate the characteristics of particular engagements, such as the industry and the type of engagement, when determining its engagement partner monitoring cycle. For example, a firm might have shorter monitoring cycles for partners with engagements in banking or financial service industries during a period of deteriorating credit quality because of increased audit risk. Similarly, engagements affected by newly adopted accounting standards may require more frequent monitoring cycles due to increased risks of misapplication of the standard. In another example, a firm may determine a longer cycle for engagements in industries that experience relatively little operational or regulatory change, such as utilities or government contracting. And finally, firms can have different engagement monitoring cycles for different groups of engagement partners. For example, a firm may choose to inspect completed engagements for all new partners within 2 years of their admission, while applying a different cycle for more experienced partners. Similarly, a firm may choose to inspect engagements for partners who consistently demonstrate strong results from the internal and external inspection of their work on a longer cyclical basis. In contrast, an engagement partner with recent PCAOB findings may be subject to a shorter engagement partner monitoring cycle. I want to highlight that QC 1000 includes an optional scalability consideration meant to assist smaller firms in their design, implementation, and operation efforts for monitoring activities. The note to paragraph 61A of QC 1000 states that for firms that issued engagement reports with respect to 5 or fewer engagements for issuers, brokers, and dealers during the prior calendar year, engagement monitoring activities may include monitoring audits not performed under PCAOB auditing standards, provided that such audits are selected taking into account the factors in paragraph 64, and that instances of noncompliance with applicable auditing standards identified through monitoring are treated as if they were engagement deficiencies for purposes of paragraph 68D, and QC observations for purposes of paragraph 72. I want to emphasize here that this consideration for smaller firms does not mean that the firm can inspect no PCAOB engagements in a particular inspection cycle. On the contrary, audits not performed under PCAOB auditing standards cannot be used for the requirement to inspect on a cyclical basis at least one completed engagement for each engagement partner. So as I mentioned on the outset, engagement monitoring activities are monitoring procedures performed on engagements, including in-process and completed engagements, which we just covered. QC 1000 includes factors in paragraph 64, which are on the left-hand side of this slide, that a firm is required to take into account when determining the nature, timing, and extent of its engagement level monitoring activities. Similar to engagement monitoring activities, QC 1000 includes factors in paragraph 65, which are on the right-hand side of this slide, that a firm is required to take into account when determining the nature, timing, and extent of its QC system level monitoring activities. Since a firm's QC system is a continuous and iterative process, these factors will generally lead a firm to perform different monitoring activities or employ different monitoring approaches over time. David, would you like to kick off our first activity?
Absolutely. So for this first activity, please refer to page 15 of your QC Workshop Handbook. This first activity is intended to reinforce familiarity with the factors in paragraph 64 that Lynette just discussed, and to get you thinking about how they might apply in some example situations. So for this activity, you will need to read each example of circumstances and events listed in Table 2, and then match each example from Table 2 with at least one related factor from paragraph 64, which are listed in Table 1. In some cases, there may be more than one possible answer. For the purpose of this activity, you are only requested to identify one factor for each example. I'll give you a few minutes to work through completing Table 2 in the handbook on your own, and then we will debrief a select few together. While you're working through the activity, I'll leave the factors from paragraph 64 on screen for your reference. Okay, let's debrief a few of the examples together. Let's start with example 2, an engagement partner's lack of experience in an industry that a company under audit recently entered. Which factor in paragraph 64 could this example relate to? And as a reminder, while we will identify one factor to debrief here, please keep in mind that this might not be the only factor in paragraph 64 that this example could relate to. Okay, so one possible answer might be F. Paragraph 64F is characteristics of particular engagement partners, such as their experience, their competence, the results of internal and external inspections of their work, and the firm's cycle for inspecting their engagements. And this factor could apply to the quality risks associated with an engagement, either positively or negatively. In particular, an engagement partner's lack of experience may create additional risks to complying with applicable professional and legal requirements. So, thinking about performing engagements monitoring activities on such engagements might be appropriate for this firm. And again, just to reiterate before we move on to some additional examples, this activity is meant to be purely illustrative. Matching each factor to a particular monitoring activity is not required under the standard. What is required is that the firm demonstrates how it has taken the factors in paragraph 64 into account in designing its monitoring activities. Let's do another one. Next, let's debrief example 5, which is that an engagement was recently inspected through an external review by the PCAOB and resulted in several findings in the engagement that were included in the published inspection report of the firm. Which factor in paragraph 64 could this example relate to? A possible answer might be D. Paragraph 64D is information obtained from oversight activities by regulators, other external inspections or reviews, and if applicable, monitoring activities performed by a network. So, information from oversight activities or network monitoring activities provides a firm with direction as to, for example, the type of procedures to perform or when to perform them in its own QC system. Furthermore, this information could also identify issues that may exist on other similar engagements of the firm, prompting a decision on whether to monitor some or all of these other engagements, taking into account the information about that particular engagement. For example, if the firm is not already required to do so, it may decide that it is necessary to design in-process monitoring activities to focus on areas of increased external inspection findings that have been identified in the firm's engagements. Importantly, a firm cannot rely solely on monitoring activities performed by others without performing its own engagement monitoring activities. Regardless of whether a network performs engagement monitoring activities over a firm's engagements, the firm is ultimately responsible for its QC system and for evaluating any information it obtains from the network about any engagement monitoring activities that the network performs. The firm will take into account the nature and extent of activities performed by a network in designing and implementing its own activities, but all firms are required to perform some level of engagement monitoring. Let's move on to another example. Next, let's debrief example 6, which is that a firm's issuer portfolio includes a significant number of banking institutions, and the current economy is experiencing a significant increase in interest rates. Which factor in paragraph 64 could this example relate to? A possible answer might be G. The factor in paragraph 64G is other information relevant to quality risks, such as emerging developments, changes in economic conditions, new accounting or auditing standards, circumstances in which the firm has withdrawn its engagement report, restatements, complaints and allegations of which the firm is aware, and other events affecting one or more engagements. So, as a result of rising interest rates, a firm may determine that there is increased audit risk related to the valuation and classification of investment securities. It may therefore determine that it is appropriate to increase the number of in-process and completed engagements that it monitors in the financial services industry, as well as perform specific monitoring activities related to the areas with increased audit risk. Let's look at one more factor from paragraph 64. So lastly, let's look at example 7, which is that an issuer has relocated its headquarters to a different city, and the firm has determined that the engagement team should be staffed out of the office in that new city. All engagement team members on the current year audit are new to this engagement. Which factor in paragraph 64 could this example relate to? A possible answer might be E. The factor in paragraph 64E is characteristics of particular engagements, such as the industry, the type of engagement, the location or jurisdiction in which the company is located or the work is to be performed, whether it is a new engagement for the firm, and the experience and competence of the individuals assigned to the engagement. So these characteristics could affect the conduct and outcomes of the engagement, because if the engagement team members are all new to the engagement, their lack of historical knowledge may present an additional risk for that engagement and provide a basis for its selection for monitoring. So now that you've gotten a feel for how to think about the factors in paragraph 64, in your workbook on page 16, there are some empty boxes at the end of table 2. As a bit of post-workshop QC 1000 implementation preparation, you can use these spaces to choose 2 factors from table 1, which again is just the factors from paragraph 64 of the standard, and think about and note down some of your firm's particular facts and circumstances that might affect the nature, timing, and extent of your engagement monitoring activities. Okay, now let's move right into our second activity. For this, please refer to page 18 of your QC workshop handbook. Activity 2 is intended to reinforce familiarity with the factors in paragraph 65 of the standard, and again to get you thinking about how those factors might apply in some example situations. So similar to what we just did for activity 1, for this activity, you're going to need to read each example of circumstances and events listed in the table, then match each example from table 2 with at least one related factor from paragraph 65, which are listed in table 1. Again, as with the previous activity, in some cases, there may be more than one correct answer. For the purpose of this activity, you are only requested to identify one factor for each example. And just as we did with activity 1, I'll give you a few minutes to work through completing table 2 in the handbook on your own, and then we will debrief a select few together. And again, while you're working through the activity, I'll leave the factors from paragraph 65 on screen for your reference. Okay, let's debrief a few of the examples together. Let's start with example 3. A firm identified a quality risk related to firm personnel misinterpreting a new accounting standard that becomes effective soon. To address this quality risk, the firm implemented various required trainings, it updated audit methodology, and published practice aids. Which factor in paragraph 65 could this example relate to? And as a reminder, while we will identify one factor to debrief here, please keep in mind that again, this might not be the only factor in paragraph 65 that this example could relate to. Okay, so one possible answer might be A. The factor in paragraph 65A is quality risks and the reasons why they were assessed as such. And the firm might design its QC system level monitoring activities to monitor the implementation of these efforts. For example, they might monitor completion of required trainings within the established timelines or perform targeted monitoring activities to assess the effectiveness of the updated audit methodology and published practice aids. Let's do another one. Next, let's debrief example 5, which is that the individual assigned operational responsibility for compliance with ethics and independence requirements is retiring soon, and the firm is going to replace this individual. Which factor in paragraph 65 could this example relate to? A possible answer might be D. The factor in paragraph 65D is changes or anticipated changes in the QC system. And changes to the required assigned roles within the QC system would be an indication that changes may be necessary to the activities that monitor the design, implementation, and operation of such roles, even if those changes may occur in the future. As a firm's QC system is continuously evolving in response to changes in risks, the firm may consider whether and how such changes necessitate changes to the nature, timing, and extent of QC system level monitoring activities. But even in the absence of changes in the QC system, for example, in cases where the firm determines that there have been no changes related to a particular quality response, the firm needs to consider whether previous monitoring activities related to that quality response continue to provide the firm with a reasonable basis to evaluate the QC system, including the appropriateness of the firm's monitoring activities for the current period. Let's move on to another example. And next, let's debrief example 8, which is that because of market forces impacting the firm experiences a decrease in audit personnel. As a result, a firm implements a new quality response that tracks utilization and overtime rates of its professionals. Which factor in paragraph 65 could this example relate to? One possible answer might be I. The factor within paragraph 65I is other relevant information of which the firm is aware. So in this particular case, as a result of the market forces impacting the firm may implement additional QC system level monitoring activities over the new quality response that tracks utilization and overtime rates of its professionals, and the firm may design appropriate actions to take when rates exceed a determined amount. Other relevant information could include information such as emerging developments, changes in economic conditions, or other events affecting the QC system of the firm. Let's look at one more factor from paragraph 65. Lastly, let's look at example 9, which is that a firm received a number of whistleblower complaints regarding individuals manipulating the software used to take mandatory training exams and sharing answers. Which factor in paragraph 65 could this example relate to? A possible answer might be H. The factor in paragraph 65H is complaints and allegations of which the firm is aware. And because of these allegations, the firm could consider implementing additional activities to monitor individuals' use of the software used to participate in training and take exams, and to monitor the firm's shared drives and emails for answer sharing. Okay, so similar to activity 1, there are 2 empty boxes at the end of table 2 in the handbook. These are intended for you to be able to go through the same exercise of choosing 2 factors from table 1 of activity 2, which in this case is the various factors from paragraph 65 of the standard, and think about particular facts and circumstances in your firm that might affect the nature, timing, and extent of your QC monitoring activities. I'm going to now hand it back over to Lynette to talk about engagement deficiencies.
Thanks, David. Next, let's talk about how to determine if engagement deficiencies exist and how to respond to them. During the next few slides, I'm going to introduce some new terms, which are highlighted in red on the slide. These definitions can be found in Appendix A of QC 1000. An engagement deficiency, as defined in paragraph A4 of Appendix A to QC 1000, is basically any instance of non-compliance with applicable professional and legal requirements, which, as Ekaterina said earlier, we refer to as APLR, and is defined in paragraph A2 of Appendix A to QC 1000. QC 1000 requires a firm to evaluate a variety of information in making its determination about whether an engagement deficiency exists, including internally developed information from monitoring activities, information from external parties like regulators and peer reviewers, and other relevant information of which the firm becomes aware. Importantly, QC 1000 requires determinations be made on a timely basis. For completed engagements, the timeliness of the determination depends on the nature of the information subject to evaluation. For example, if the information suggested other engagements may present a similar issue, then we would expect that determination to be made sooner so that the risk of engagement deficiencies on other engagements, in particular in-process engagements, is mitigated. Next, I want to take a minute to highlight some unique considerations related to monitoring of in-process engagements and the identification of engagement deficiencies on those engagements. The objective of in-process engagement monitoring is to evaluate information about potential deficiencies on in-process engagements to determine whether an engagement deficiency exists and, if so, to correct the deficiency before the engagement report is issued. Even in instances where an engagement deficiency does not arise because a problem was identified and corrected prior to issuance of an engagement report, the firm would still be required to consider whether the existence of the problem constitutes a QC observation, an observation about the design, implementation, or operation of the firm's QC system that may indicate one or more QC deficiencies exist. And I'll talk more about QC observations in the next section. When an engagement deficiency is identified, the action that the firm is required to take depends on the type of engagement the deficiency was identified in. Actions to respond to engagement deficiencies related to in-process engagements are required, generally, to be taken before the issuance of the related engagement report. Actions to respond to engagement deficiencies related to completed engagements are also required to be taken as required by APLR, unless it is probable that the engagement reports are not being relied on. However, if it is not probable that the report is not being relied on, the firm is required to take action required by APLR, in this case, AS 2901 and AS 2905 as applicable. AS 2901 addresses how to respond to an engagement deficiency identified after the issuance of the auditor's report, and it was amended as part of the adoption of QC 1000. Finally, if a firm identifies an engagement deficiency on work it performed on another firm's engagement, it is required to communicate the deficiency to that other firm and to take any remedial action that the other firm determines is necessary to respond to the deficiency. David is now going to walk you through an activity related to engagement deficiencies.
Thanks, Lynette. So now that we've discussed the requirements related to identifying and responding to engagement deficiencies, let's do an activity related to this. For this, you'll need to turn back to the QC Workshop Handbook to Activity 3 on page 21. So for this activity, you will need to read each scenario in Table 2 and determine whether, based on the available facts and circumstances, an engagement deficiency exists. Again, this being based on the definition of an engagement deficiency in QC 1000 that we've just covered, and for your reference, the definition of engagement deficiency is also included in Table 1 of the activity. For this one, we're going to walk through and debrief each scenario together. In our first scenario, a completed engagement selected for internal monitoring revealed that the company subject to audit was not included in the firm's restricted entity list. It was identified that as a result of the company subject to the audit not being included in the firm's restricted entity list, that a covered person had a direct investment in the entity. So based on the facts presented, is this an engagement deficiency? Yes or no? For this one, we have yes. So the definition of engagement deficiency not only includes those instances where a firm did not adequately support its opinion, but also includes other instances of non-compliance with applicable professional and legal requirements with respect to a firm's engagement, which may include, for example, not satisfying applicable independence requirements, not making required communications to the audit committee, or not filing Form AP. And as a quick reminder, as we walk through these examples in particular, the scenarios and examples included in this workshop are intended to provide a general understanding of QC 1000, and so the facts presented are partial, and conclusions will be affected by all the facts and circumstances in any individual case. Okay, let's move on to the next one. For the next scenario, in-process monitoring of an engagement revealed that an engagement team initially failed to obtain sufficient appropriate audit evidence in its testing of revenue because it failed to perform a necessary procedure. This engagement is still in process. So based on the facts presented, is this an engagement deficiency? Yes or no? For this one, we have no. So because the engagement team could still perform the procedure at a later time during the engagement, and as long as sufficient appropriate audit evidence was obtained prior to the issuance of the report, then there would be no engagement deficiency. However, the firm would still be required to consider whether the existence of a problem constitutes a QC observation, which is an observation about the design, implementation, or operation of the firm's QC system that may indicate one or more QC deficiencies exist. Let's look at another. In scenario 3, in-process monitoring of an engagement revealed that an engagement team did not obtain the required audit committee pre-approval of certain permissible tax services that the firm's tax practice performed earlier in the year. So based on the facts presented, is this an engagement deficiency, yes or no? Here we have yes. Because the firm had already performed the services, the required pre-approval could not be obtained. This is determined to be a QC deficiency. Further, for engagement deficiencies that could result in an unsupported auditor's opinion or that could affect the auditor's report, for example, a critical audit matter, remedial action is required before the auditor's report is issued, such that the auditor's report issued is appropriate in the circumstances. If an engagement deficiency would not result in an unsupported auditor's opinion or would not affect the auditor's report, which in this example would be the failure to obtain pre-approval of the tax service, action is still required to address the deficiency. But if action is performed after the report is issued, the provisions of paragraph 68B addressing engagement deficiencies on completed engagements apply. Let's look at another. In our next scenario, a completed engagement selected for internal monitoring revealed that the engagement team failed to perform any procedures related to the use of the work of the company specialist as audit evidence when testing the valuation of a derivative liability. As a result, the firm determined that the engagement team failed to obtain sufficient appropriate audit evidence over this significant account. Based on the facts presented, is this an engagement deficiency, yes or no? Here we have yes. And because this is a completed engagement, the requirements under AS 2901 would apply. Under paragraph 3 of AS 2901, in cases where the auditor did not obtain sufficient appropriate audit evidence to support the opinion, the auditor is required to either obtain additional evidence such that the opinion is adequately supported, or take action to prevent future reliance on the report, in accordance with paragraphs 6 through 9 of AS 2905. The type of procedures that the auditor performs in response should be guided by the type and amount of evidence needed to support the auditor's opinion. If the auditor is not able to obtain sufficient appropriate audit evidence to support the opinion, the auditor is required to take appropriate action to prevent future reliance on the audit report. Let's take a look at another. Next, we have that during monitoring of a completed engagement, a firm identified that the engagement team filed its Form AP after the deadline. Based on the facts presented, is this an engagement deficiency, yes or no? Here we have yes. And again, because this is a completed engagement, the requirements under AS2901 would apply. Because this engagement deficiency does not represent a situation where the auditor did not obtain sufficient appropriate audit evidence to support the opinion, paragraph 4 of AS2901 would apply. Under paragraph 4, for all other deficiencies on audit engagements, the auditor is required to take action to address the deficiency. Taking into account the nature and severity of the deficiency, and based on the auditor's determination of what action, corrective, preventative, or both, is appropriate based upon the specific facts and circumstances. Let's look at the next one. In scenario 6, we have that as part of the firm's quality response related to technological resources, the firm's technology leader must review and approve all software audit tools used on the firm's engagements. During monitoring of a completed engagement, the firm identified that the engagement team did not receive the appropriate authorization to use a specific audit software tool. Based on the facts presented, is this an engagement deficiency, yes or no? So here we have no but, because it is possible that the firm's engagement monitoring activities could identify not only engagement deficiencies, but also QC observations that are not engagement deficiencies. That is, they do not result in a non-compliance with applicable professional and legal requirements. So in this case, that observation would be a QC observation, regardless of whether the use of the tool also give rise to an engagement deficiency. Note that the appropriate authorization to use a specific audit software tool is not required by applicable professional and legal requirements, and as a result, would not result in an engagement deficiency. Let's look at another. In our next scenario, we have that during monitoring of an in-process engagement, a firm determined that an engagement team did not test the accuracy and completeness of information produced by the company that it used to perform substantive procedures over accrued expenses, as required by paragraph 10 of AS 1105 audit evidence. In response, the engagement team performed the required audit procedures before the auditor's report was issued. So based on the facts presented, is this an engagement deficiency, yes or no? Here we have no. So because the engagement team could still perform the procedure at a later time during the engagement, and as long as sufficient appropriate audit evidence is obtained prior to the issuance of the report, there would be no engagement deficiency. However, the firm would still be required to consider whether the existence of the problem constitutes a QC observation, which again is an observation about the design, implementation, or operation of the firm's QC system that may indicate one or more QC deficiencies exist. Let's look at the next one. So in scenario 8, we have that while assembling audit documentation for retention for a recently completed engagement, the engagement team identifies that it inadvertently did not include a matter that the firm determined to be a critical audit matter in the auditor's report. Based on the facts presented, is this an engagement deficiency, yes or no? Here we have yes. And again, because this is a completed engagement, the requirements under AS 2901 would apply. Because this engagement deficiency does not represent a situation where the auditor did not obtain sufficient appropriate audit evidence to support the opinion, paragraph 4 of AS 2901 would apply. Under paragraph 4, for all other deficiencies on audit engagements, the auditor is required to take action to address the deficiency, taking into account the nature and severity of the deficiency and based on the auditor's determination of what action, corrective, preventative, or both, is appropriate based upon the specific facts and circumstances. Corrective actions may include, for example, actions taken to address engagement deficiencies on completed engagements, while preventative actions may include, for example, actions taken to deter future engagement deficiencies. Let's move on to the last scenario of this activity. So in scenario 9, we have that a firm issued the audit report for issuer X in the previous year. During the third quarter of the current fiscal year, issuer X experienced a significant financial loss that forced the company to dissolve its business and cease all active market trading. In connection with the firm's internal engagement monitoring activities during the current year, it identified an engagement deficiency on another issuer engagement of the firm. When the firm performed procedures required by paragraph 68D of QC 1000 to determine whether similar engagement deficiencies exist on other engagements of the firm, it identified that a similar engagement deficiency exists on the audit of issuer X, for which the firm issued the audit report in the previous year. So based on the facts presented, is this an engagement deficiency, yes or no? So here we have yes, but. So as described, the firm did identify an engagement deficiency while performing procedures related to paragraph 68D on another engagement. And while the firm did identify an engagement deficiency in the prior year audit of issuer X, under paragraph 1 of AS 2901, the cessation of a trading market for the issuer's securities evidences that it is probable that the report is not being relied upon. Therefore, although an engagement deficiency was identified, the firm does not need to take action to address the engagement deficiency on that engagement. The determination that an auditor's report is not being relied upon would primarily be influenced by whether the auditor's report and related financial statements are readily available and whether a trading market exists for the company's securities. Circumstances that may suggest the engagement report is no longer being relied upon could include that so much time has elapsed that the financial statements covered by the auditor's report are no longer required to be included in SEC periodic reports, or the issuer or broker-dealer's business has been dissolved or gone into liquidation. Okay, I'll now hand it back over to Lynette to briefly discuss the requirements for evaluating whether similar engagement deficiencies exist.
Thank you, David. Now that we've covered how to determine whether engagement deficiencies exist and how to respond to them, including the amendments to AS 2901, let's go back to QC 1000 and discuss the requirements to evaluate whether similar engagement deficiencies exist on other in-process engagements, completed engagements, and work performed on other firms' engagements. If similar engagement deficiencies are identified, QC 1000 requires the firm to respond to these engagement deficiencies in the same manner as the firm would respond to any other engagement deficiency it may identify. We received questions about how to implement this requirement, that is, how to evaluate whether similar engagement deficiencies exist on other engagements. For example, is the firm expected to look at all engagements, some, or take a risk-based approach. Understanding the nature of the engagement deficiency will assist the firm in determining the extent of the necessary evaluation. David is going to lead you through an activity on this topic next.
Thanks, Lynette. Okay, so let's build on this through an activity. Please refer in your QC Workshop Handbook to activity number 4, which is on page 23. Okay, so as you're finding activity 4 in the handbook, I'll walk through the instructions. So for this activity, you're going to read the engagement portfolio for the example firm in Table 1, and for each scenario listed in Table 2, which is on pages 23 through 24 of the handbook, consider how you might approach addressing the requirements in paragraph 68D. That is, how you would go about evaluating whether similar engagement deficiencies exist on other engagements, and select the best answer or answers from the choices provided, keeping in mind that there could be more than one correct answer. Similar to the last activity, we're going to walk through and debrief each scenario together. So first, let's go ahead and take a look at the example firm scenario in Table 1. So we've got a firm that has 20 engagements in its portfolio comprised of the following: 4 small community mortgage bank engagements, 5 large financial institution engagements, 2 pharmaceutical company engagements, 7 retail engagements, and 2 oil, gas, and coal engagements. I've also got the requirement related to paragraph 68D on the screen that Lynette walked us through a few moments ago. So with that knowledge, let's take a look at each example scenario of where there was an engagement deficiency identified and discuss some different possible ways to approach complying with paragraph 68D. In scenario 1, the firm internally developed a technology-based tool specifically for use on its community banking clients to test the reasonableness of the fair values of collateral underlying certain loans. During the current year internal monitoring activities, the firm selected one of the completed community bank engagements for inspection and identified an error in one of the tool's embedded macros that caused an incorrect fair value to be assigned to the collateral. Which of the following approaches would you propose to take in order to comply with the requirements of paragraph 68D of QC 1000? Again, keep in mind that there may be more than one appropriate response. Okay, let's debrief. First, let's look at A. Because this engagement deficiency relates to a tool that is only used on the banking institutions of the firm, it would only need to consider its banking institution clients. If this tool was only used for its smaller community bank engagements, there may not be a need to evaluate its large financial institutions that did not use the tool. Next, let's look at B. While the firm is not expected to conduct a full review of each potentially affected engagement, a firm can take this approach if it so chooses. But I want to emphasize that the procedures to evaluate whether similar engagement deficiencies exist can be scalable and practical. And in this example, it may not be the best approach given the facts. Finally, let's look at C. So sending an email to your engagement partners is a simple and practical first step in identifying whether further action is necessary. And so this seems like a reasonable approach in this situation. Let's look at another scenario. Here, an engagement deficiency in the testing of accounts receivable was identified on a completed engagement selected for inspection, and it was determined that the cause of the deficiency was that the engagement team failed to perform certain procedures in the firm's audit program and therefore did not obtain sufficient appropriate audit evidence over this significant account to support its opinion. Which of the following approaches would you propose to take in order to comply with the requirements of paragraph 68D? And the same applies here. There may be more than one appropriate response. Okay, let's debrief. And let's talk about A and B together. So in this case, because we know that the procedures are in the firm's audit program, it doesn't appear to implicate a problem with the design of the QC system. So yes, the firm might take the approach to evaluate whether the person who was responsible for performing the procedures and the person supervising the work participated in accounts receivable testing for any of the firm's other engagements, and if so, whether similar engagement deficiencies exist. Regarding C, under no circumstance would it be appropriate for the firm to assert an assumption in order to demonstrate compliance with paragraph 68D. Let's take a look at the last scenario for this activity. Here, during monitoring of a completed engagement, a firm identified in the work papers that the engagement team had incorrectly calculated the sample size for its fixed asset additions substantive testing. The firm identified that the incorrect calculation was due to an error in the firm's sampling tool. Again, which of the following approaches would you propose to take in order to comply with the requirements of paragraph 68D? Okay, let's debrief. First, let's consider A. So because this engagement deficiency relates to a tool that was used on all engagements, the firm would need to evaluate whether all other engagements that use the sampling tool also had miscalculated sample sizes. And so A would be an appropriate approach here. Now let's look at B, C, and D together. Regardless of the approach taken, it is important to note that upon identifying an engagement deficiency, it would not be appropriate for a firm to take a risk-based or sampling approach or apply a more narrow criteria that does not relate to the underlying reason for the engagement deficiency to determine which other engagements to evaluate for similar issues. In this case, the fact that the deficiency was identified in the fixed asset additions testing is irrelevant, since the sampling tool could have been used to perform testing on any financial statement account on another engagement. And likewise, how much revenue that particular engagement brings in for the firm is also irrelevant. So that concludes activity 4. Next, Lynette is going to discuss QC observations and QC deficiencies.
Thank you, David. Next up on our monitoring and remediation pie chart, we'll talk about how to determine if QC observations and QC deficiencies exist. Firms are required to timely evaluate certain information to determine whether QC observations exist, including information from monitoring activities, from oversight activities by regulators or other external inspections or reviews, or any other relevant information the firm becomes aware of. QC observations is a defined term in paragraph A9 of Appendix A. Basically, any information that may indicate a problem with the design, implementation, or operation of the firm's QC system is a QC observation. That includes all engagement deficiencies, including, as I mentioned earlier, engagement deficiencies on in-process engagements that were corrected, as well as things like an error in the design or operation of a technology tool or methodology, or any other information that suggests the firm may not have achieved a quality objective. Once the firm identifies QC observations, it evaluates them to determine whether QC deficiencies exist. So firstly, QC deficiency is a defined term in paragraph A8 of Appendix A to QC 1000. I'm not going to read the full definition. At a high level, a QC deficiency is a QC observation or combination thereof that evidences either the firm hasn't achieved the reasonable assurance objective or one or more quality objectives, or it hasn't complied with the requirements of QC 1000. The determination of whether a QC deficiency exists is based on two factors. The first is the nature, severity, and pervasiveness of the matter that gave rise to the QC observation. And the second is the likelihood that the matter could affect other QC system components or other engagements, including in-process and completed engagements, engagements to be performed in the future, and work performed on other firms' engagements, and the severity of such an effect if it were to occur. So let's talk a bit more about the factors. As discussed on the previous slide, the nature, severity, and pervasiveness of the matter that gave rise to the QC observation should be taken into account when determining whether a QC deficiency exists. Factors affecting this determination are listed on this slide. An important point that I want to make here is that a firm would not take into account, for purposes of determining whether a QC deficiency exists, any mitigating actions, even if they have been implemented. Whether the firm has subsequently able to partially or fully remediate the QC deficiency does not eliminate the fact that the failure occurred. Now we will work through an activity on QC deficiencies with David.
Thanks, Lynette. Okay, so now that we've discussed the requirements related to determining whether QC deficiencies exist, let's do an activity related to this in our QC workshop handbook. So please turn to activity number 5 on page 26 of the workbook. So for this activity, you'll need to read each of the QC observation scenarios in Table 3 and determine whether a QC deficiency exists based on the available facts and circumstances. To do this, you will need to use the definition of a QC deficiency, which is provided in Table 2 of the activity, and also take into account the factors in paragraph 72 of QC 1000, which are provided in Table 1. And you can make a note of the factors from paragraph 72 that influence your determination. Similar to the last activity, we're going to walk through and debrief each scenario together. In scenario 1, a completed engagement selected for internal inspection by the firm identified the existence of an engagement deficiency that the revenue testing was not completed in accordance with applicable professional and legal requirements because the firm did not obtain sufficient appropriate audit evidence. The firm determined that the methodology for auditing revenue itself was appropriately designed to comply with applicable professional and legal requirements, but it was not executed properly by the engagement team. Procedures performed by the firm in evaluating whether a similar engagement deficiency exists on other engagements reveal that other engagements where revenue testing was performed by the same engagement team also did not comply with applicable professional and legal requirements. Is this a QC deficiency? Yes, no, or maybe? So here we have maybe. Let's discuss this. So this QC observation relates to the engagement performance and resources components. Since the firm determined that its methodology for auditing revenue was appropriately designed to comply with applicable professional and legal requirements, but was not executed properly by the engagement team, the QC observation points to an operational failure. The firm's review also revealed that the issue was not isolated, as other engagements showed similar engagement deficiencies when the same engagement team was involved. This means that the QC observation affected multiple engagements. So in this case, a quality response is not operating effectively, and therefore, maybe the firm hasn't reduced the likelihood of not achieving the reasonable assurance objective to an appropriately low level. However, on the other hand, while similar engagement deficiencies were found in other engagements, because the deficiency is limited to the operation of the QC system and is limited to a single team, a firm might determine that this observation is not a QC deficiency. There can be a number of factors that influence the determination as to whether a QC deficiency exists, and that information must be weighed and evaluated. Let's move on to the next scenario. In scenario 2, a QC observation is identified related to an error in an industry-specific audit tool only used on a few engagements of the firm. Is this a QC deficiency? Yes, no, or maybe. Here we have no. The QC observation relates to the design of the tool and possibly implementation if the tool was not appropriately validated or embedded. But the tool was only used on a few engagements, meaning the issue is limited in frequency. However, on the other hand, if the firm lacked policies and procedures for approving the use of the tool, that could evidence a QC deficiency related to the design of the firm's QC system. In terms of the factors, this QC observation relates to the use of a tool, i.e. a technological resource within the resources component, and it also impacts the engagement performance component as the use of the tool impacted the performance of audit procedures. Let's take a look at another. In our next scenario, we have that an engagement deficiency is identified because of an error in the firm's audit methodology, which is used on all of the firm's engagements. Is this a QC deficiency? Yes, no, or maybe. Here we have yes. In this scenario, the firm's audit methodology contained a design flaw affecting all engagements. The systemic nature of the problem points to a QC deficiency. In terms of the factors, this QC observation relates to the engagement performance and resources components and relates to the design of the QC system because the audit methodology was flawed. The issue affects all engagements, and so it is considered high frequency. Let's look at the next one. For our fourth scenario, we have that as part of a firm's quality response related to technological resources, the firm has designated an individual who must review and approve all software audit tools used on engagements. The firm's engagement monitoring activities reveal that an engagement team did not receive the appropriate authorization to use a specific tool for the past 3 years. No other engagements that the firm reviewed revealed a similar QC observation, i.e. all other reviewed engagement teams that used the tool obtained the appropriate authorization for its use. Is this a QC deficiency? Yes, no, or maybe. Here we have no. And that's because this scenario relates to an operational breakdown in following procedures for approving the use of technological resources. While the facts point to an operational issue with recurring non-compliance, no other engagements that the firm reviewed revealed the same QC observation, and so this doesn't appear on its face to represent a QC deficiency. However, this engagement team failed to obtain the appropriate authorization for the past 3 years, and the firm is only catching it now. And so the firm might want to consider whether the monitoring and remediation process itself is operating effectively. Let's look at another. In our next scenario, we have that a firm updated its policy related to consultations to include mandatory consultation on digital asset valuations in the current year. The firm communicated this change in methodology via email to all staff, and they also made updates to its audit file platform to include this new required consultation into the list of required consultations that appear on the completion document checklist. During internal inspection of a completed engagement, a QC observation was identified because the engagement team failed to perform the required consultation, even though their audit engagement was subject to this new required consultation for digital assets. Is this a QC deficiency? Yes, no, or maybe. Here we have maybe. So this scenario involves a failure to follow the firm's updated procedures for internal consultations. Based on the information provided, it appears that internal monitoring identified a QC observation only on this engagement. However, the firm will need to consider whether this truly is an isolated incident, or if this is a widespread issue that might implicate an issue in the firm's communication of changes to its policies and procedures, which could therefore indicate a QC deficiency. In terms of the factors, this QC observation affects the engagement performance component, but it may affect other components. For example, the resources component as it relates to the competence and training of firm personnel, as well as the firm methodology resources. It may also affect the information and communication component as it relates to a failure to effectively communicate changes to the methodology. Let's move on to our next and last scenario of Activity 5. Here we have that to comply with the requirements in paragraph 12b of QC 1000, a firm assigned 2 individuals, both firm personnel, to operational roles, one with the responsibility for the firm's compliance with ethics requirements, and the other with responsibility for the firm's compliance with independence requirements. Is this a QC deficiency? Yes, no, or maybe. Here we have yes. This is a QC deficiency because it evidences non-compliance with the requirements of QC 1000 other than those under documentation. In particular, the firm did not assign one individual with operational responsibility for the firm's compliance with ethics and independence requirements in accordance with QC 1000 12b. And note the note to paragraph 12, which states that each of the roles identified in subparagraphs A through C of paragraph 12 cannot be shared, but rather must be assigned to only one individual. Okay, so that concludes activity 5. I'll now turn it back to Lynette to talk about root cause.
Thank you, David. Next, let's talk about performing root cause analysis of QC deficiencies. This is the fourth slice of the monitoring and remediation pie chart. QC 1000 requires the firm to perform a root cause analysis of all QC deficiencies. Root cause analysis involves identifying and evaluating the causal factors that led to each QC deficiency, what happened, and why. Proper determination of the causal factors that led to QC deficiencies is essential to developing effective remedial actions. QC 1000 doesn't specify how a firm should perform a root cause analysis. The firm's approach can vary, and procedures could take different forms depending on the circumstances, which allows for scalability. Some example procedures include interviewing engagement team members and firm leadership, considering available training records, or partner experience. Some examples of key elements that may lead to more robust and comprehensive root cause analyses are listed on the slide. Finally, let's discuss remedial actions to address QC deficiencies. On the next slide, I'll highlight the requirements related to designing, implementing, and testing remedial actions. But before I do that, one important distinction I want to make regarding remedial actions is the difference between 1, the remedial actions required under QC 1000, and 2, the PCAOB's assessment of a firm's remedial efforts in response to quality control criticisms identified during PCAOB inspections. These are distinct concepts, and they are subject to different processes, guidance, and objectives. Firms are required to design and implement timely remedial actions to respond to QC deficiencies, taking into account the results of the firm's root cause analysis and the nature, severity, and pervasiveness of the QC deficiency. I want to make a few other points related to remedial actions. A firm might design and implement temporary remedial actions until permanent actions can be designed and implemented. Or, for a more complex QC deficiency, the firm may develop a multi-step plan with milestones. Now, regarding compensating responses, if the remedial actions, including any relevant compensating responses that the firm has in place and that may address the same quality risk, have been tested and found effective in addressing the issue, the firm might determine, based on the facts and circumstances, that no further remedial action is necessary. This is an important point to note that compensating responses cannot form part of the firm's evaluation of whether a QC deficiency exists, but compensating responses may be considered when determining what actions a firm will need to take in order to remediate the QC deficiency. And once additional remedial actions are taken, the firm performs monitoring activities of the remedial actions until it determines that the QC deficiency has been remediated. Now I'm going to hand it off to David to do a set of activities related to these topics.
Thanks, Lynette. Okay, so in this next activity, I want to focus more on developing an approach to root cause analysis and remedial actions to respond to QC deficiencies. Let's take a moment to turn to activity number 6 in your QC workshop handbook, which starts on page 29. This activity is split out into 2 activities, activities 6.1 and 6.2. Let's start with 6.1 on the root cause analysis process. So for this activity, you will need to read each example approach to root cause analysis in the table beginning on page 29 and consider whether the approach would be more or less likely to facilitate the identification and evaluation of the causal factors that led to a QC deficiency. And again, we're going to walk through and debrief each scenario together. For the first approach to root cause, we have assigning an individual or team to evaluate engagement deficiencies periodically throughout the year, perhaps as and when methodology and process updates are incorporated into the firm's audit practice. Is this more likely or less likely to facilitate an effective root cause analysis? Here we have more likely. This may be helpful, in particular for smaller firms that may have less resources to dedicate. Now, larger firms may use independent, dedicated teams with root cause analysis experience to bring more objectivity into the process, including full-time or part-time senior level professionals with relevant experience and background, as well as professionals with expertise in behavioral fields. A diverse root cause analysis team promotes multiple perspectives and drives an in-depth understanding of causal factors. Let's look at another approach. Next, we have providing specific targeted internal and external training to those responsible for causal analysis. Is this more likely or less likely to facilitate an effective root cause analysis? Here, we have more likely. In addition, developing and conducting onboarding sessions and providing on-the-job training by shadowing alongside other staff with more root cause analysis experience are also ways to approach a well-designed process that may contribute to the improvement of audit quality. Let's look at another. Next, we have the use of a checklist approach to root cause analysis, with templates that provide for selecting from a list of potential causes included in pre-populated fields. Is this more likely or less likely to facilitate an effective root cause analysis? Here we have less likely. So, although helpful, this approach appears to be too linear and limiting for complex problems, and these methods will not likely show the many intricate interrelationships between each cause and associated effect. The more thoughtful the analysis, the more likely a firm will identify the major causal factors and thus be able to design and implement effective remedial actions. This approach may also result in a bias towards assigning pre-identified causal factors, limiting the number of causal factors identified or the specific causal factors. Let's look at another. The next approach includes developing well-documented root cause analysis guidance and processes for the firm's root cause analysis professionals. Is this more likely or less likely to facilitate an effective root cause analysis? Here we have more likely. And that's because these formal documented processes and guidance would provide insights and techniques in executing root cause analysis procedures. This guidance promotes consistency, comparability, and accountability in the firm's root cause analysis process. Let's look at the next one. Our fifth approach includes conducting interviews with the engagement team immediately after deficiencies are identified. Is this more likely or less likely to facilitate an effective root cause analysis. Here we have more likely. Note that while this is generally a good practice, there may be some situations where you might want to consider allowing for some passage of time to provide the audit team member some degree of perspective, as well as to introduce less emotion or personal bias into the process. Let's look at the next approach. This approach is to perform the root cause analysis close to the evaluation date of September 30th. Is this more likely or less likely to facilitate an effective root cause analysis? And here we have less likely. And that is because this limits the firm's ability to implement remedial actions in a timely manner and could result in unremediated QC deficiencies at the end of the evaluation period that may or may not result in a major QC deficiency. Let's look at another. Our next approach includes focusing on analyzing only negative events. Is this more likely or less likely to facilitate an effective root cause analysis? Here we have less likely. And this is because one of the things we have observed is that when firms compare the results of their analysis of positive quality events to those audits with deficiencies, it does help inform the firm of potential actions to continuously improve audit quality. For example, certain procedures, techniques, or voluntary practice aids may have contributed to an engagement performed in accordance with applicable professional and legal requirements. These firms use the information obtained from such evaluations to assess the actions of individuals on engagements with deficiencies, ultimately highlighting potential actions to prevent future engagement deficiencies. And so, evaluating positive outcomes could contribute to the success of the firm's root cause analysis and remediation efforts. Therefore, the standard includes a note in paragraph 75 highlighting that it may be beneficial for firms to consider actions, behaviors, or conditions that resulted in positive outcomes, such as where aspects of the firm's QC system operated effectively, or where no engagement deficiencies were identified for individual engagements. Okay, let's move on to the next approach. The root cause analysis approach in example 8 is analyzing both individual deficiencies at the engagement performance level and also considering a broader assessment, such as topical trends or deficiencies related to specific guidance or practice aids. Is this more likely or less likely to facilitate an effective root cause analysis? And here we have more likely. So for this one, I just want to remind you that under paragraph 73 of QC 1000, the firm may perform root cause analysis of QC deficiencies individually or may group similar QC deficiencies together. Let's look at another approach. The approach taken in example 9 is prioritizing root cause analysis efforts on areas determined to pose the highest risk to the firm and or to the financial statements being audited. Is this more likely or less likely to facilitate an effective root cause analysis? And here we have more likely. Through our oversight activities, we have observed that some firms focus their analysis on restatements and certain firms focus on prioritizing and categorizing causal factors based on weightings and exception types or deficiency types. Focusing efforts on higher risk areas ensures that firms spend their time and resources on areas likely to have the most impact. Notwithstanding higher risk areas, some firms also prioritize efforts on pervasive or broadly applicable areas that affect more audits. Let's look at the last approach in this activity. Our last example includes assigning root cause analysis responsibilities to an individual within the firm that has insufficient time and does not have the appropriate support, but is eager to participate. Is this more likely or less likely to facilitate an effective root cause analysis? And here we have less likely. So, as a reminder, it is a quality objective in QC 1000, paragraph 44E, that individuals who are assigned to perform activities within the QC system have the competence, objectivity, authority, and time needed to perform such activities. Firms will need to consider the expertise of the individuals assigned to this process and determine whether they have the appropriately experienced and skilled professionals trained in the causal analysis techniques needed to perform root cause analysis. So that concludes activity 6.1. Let's now do an activity related to remedial actions. And for this, please turn to activity 6.2 in your QC handbooks, which is on page 33. So for this activity, you will need to read the example firm scenario in table 1. We'll also take a look at this together on the next slide. And you will then need to review the identified causal factors in table 2 and consider which of the remedial actions you might implement to address the QC deficiency, keeping in mind that there could be more than one appropriate response. And again, we're going to walk through and debrief each scenario together. Let's get started. Okay, so let's read through the example firm scenario in table 1. Here, consider a situation in which a firm identified an engagement deficiency that it evaluated and determined to be a QC deficiency, specifically insufficient testing of management review controls in business combinations. The firm concluded that one cause of the deficiency was insufficient supervision and review by the audit partner, who appeared to rely heavily on a senior manager who was new to the engagement team and who did not have sufficient experience or knowledge of the public company. Additionally, the firm identified other causes, such as a lack of technical competence and a lack of training of key senior team members, since the team had insufficient knowledge on how to test review controls, including the appropriate use of firm guidance and templates. So in this scenario, we've identified 3 causes for the QC deficiency. Let's take a look at how we might go about developing remedial actions to address this deficiency, taking into account the identified causal factors. So our first causal factor was insufficient supervision and review by the audit partner because the partner relied heavily on a senior manager who was new to the engagement team and who did not have sufficient experience or knowledge of the public company. Which of the following remedial actions would you propose to implement to address the QC deficiency related to the identified causal factor? And please keep in mind that there may be more than one appropriate action. Okay, let's debrief. So the firm might consider reducing the engagement partner's workload if it is too heavy. Also, the firm might find it beneficial to identify and track certain performance indicators, such as distribution of hours during the year, partner workload and utilization, or partner industry or client experience, in order to potentially prevent the occurrence of deficiencies. Information obtained from firms' root cause analysis may further enable the identification and development of performance indicators that correlate to what may prevent a deficiency, both at the audit engagement level and at the level of a QC deficiency. However, promoting the senior manager to partner would not address the QC deficiency, and neither would simply speaking to the engagement partner. Okay, let's look at the next one. The second causal factor was a lack of technical competence and training of the senior team members on how to test management review controls. Which of the following remedial actions would you propose to implement to address the QC deficiency related to the identified causal factor? Okay, let's debrief. So yes, with respect to A, this could be a good remedial action to take. And I want to emphasize that for such actions, such as new or revised guidance or policies, firms should consider 1. The effective date of the guidance or policy, 2. The method of communication and reinforcement to practitioners, and 3. Whether a specific group or individual is responsible for execution and/or oversight and monitoring of the new policy or guidance. And yes, with respect to B, specific mandatory training may be appropriate for these individuals, or all staff as a reminder. And importantly, here for A and B, we would expect that these be done together. Updates to policies and guidance likely won't be much help if the issue was that the staff wasn't competent on those policies and guidance, in which case training would also be needed. With respect to C and D, we did not select these. When considering the effectiveness of training programs, firms could consider 1. Whether the training is specifically tailored or fit for purpose and provided to the appropriate levels of professionals within the firm who would be expected to perform or review the audit procedures that resulted in the deficiencies. 2. The extent to which the training is mandatory for the target audience and the related participation. 3. The training delivery method, be it in person, webcast, or self-study. 4. The quality of the content and the amount of time devoted to the specific QC deficiency with respect to which the training is employed as a remedial step. 5. The content of the training, for example, the inclusion of case studies and/or periodic testing during the session, and how it changed from previously provided training. 6. Whether there is a post-course assessment and/or the training qualified for CPE credit. And 7. The background and qualifications of the course instructors. Okay, let's move on to the last causal factor. The third and final causal factor identified was a lack of technical competence and training on the appropriate use of firm guidance and templates. So for this causal factor, I want to dig a bit further into training programs as a remedial action. So let's assume that the firm intends to develop a training for firm personnel on the appropriate use of firm guidance and templates. Which of the following should the firm take into account when developing a training to address the QC deficiency related to the identified causal factor? Again, keep in mind there may be more than one appropriate response. Okay, let's debrief. So similar to the items discussed in the previous slide, if the firm intends to implement training, it should consider how it will monitor participation. For example, how the firm would determine the target audience required to participate in the relevant training, how it would follow up with those who did not participate in any mandatory training, how it would advise professionals who did not participate in the mandatory training regarding the required participation alternatives. For example, possible makeup sessions or self-study options. And also how it considers a professional's compliance with training requirements in staffing decisions and the firm's performance management process. So that concludes activity 6.2 and our monitoring and remediation activities overall. I'm now going to hand it over to Ekaterina to discuss evaluating the firm's QC system.
Thank you, David and Lynette. So let's talk about the evaluation requirements of QC 1000. We won't be covering the evaluation requirements in detail today, but I do want to highlight that the conclusions a firm is required to reach under QC 1000 because those conclusions are different from other quality management standards, and they also introduce a new defined term in QC 1000, as well as cover the timing of reporting on the firm's evaluation to the PCAOB. So QC 1000 requires the firm to evaluate the effectiveness of its QC system based on the results of its monitoring activities and conclude as of September 30th of each year, which is also referred to as the evaluation date, that its QC system is effective with no unremediated QC deficiencies, is effective except for one or more unremediated QC deficiencies that are not major QC deficiencies, or is not effective, meaning one or more major QC deficiencies exist. The evaluation requirement of QC 1000 introduced another new term, so major QC deficiency. It is defined in paragraph A6 of Appendix A, and essentially it's an unremediated QC deficiency or a combination of unremediated QC deficiencies that severely reduces the likelihood of a firm achieving the reasonable assurance objective or one or more quality objectives. As I mentioned a few slides ago, QC 1000 requires the firm to evaluate the effectiveness of its QC system based on the results of its monitoring activities and conclude as of September 30th of each year on the effectiveness of its QC system. Each reporting period thereafter will begin on October 1st and end on September 30th of the following year. And the last thing I'll mention here that firms are required to file their report on Form QC regarding that evaluation to the PCAOB by November 30th. All right, so the last topic on our agenda is documentation. QC 1000 includes requirements for documenting the firm's QC system. So we'll talk about those requirements next. And you can go ahead and find paragraphs 81 and 86 in the standard. That's where documentation requirements are. Firms must prepare and retain documentation of the design, implementation, and operation of the QC system and of the annual evaluation of the QC system. The documentation is required to be in sufficient detail To support a consistent understanding of the QC system by firm personnel, including an understanding of their roles and responsibilities with respect to the QC system, and similar to AS 1215, titled Audit Documentation, QC 1000 applies the experienced auditor threshold when determining the sufficiency of the documentation to be prepared and retained by the firm. QC 1000 requires the documentation to be in sufficient detail to enable an experienced auditor that understands QC systems to have no experience with the design, implementation, and operation of the firm's QC system, to understand the firm's QC system, including the quality objectives, quality risks, quality responses, monitoring activities, remedial activities, and basis for the conclusions reached in the evaluation of the QC system. Further, we have a note to paragraph 83D, and that note states that the documentation must include documentation that enables an experienced auditor to evaluate the operation of the quality response. The extent of documentation to evidence whether quality response operated effectively is dependent on the size of the firm's PCAOB practice and the assessed quality risk and the established quality responses. QC 1000 includes a list of specific matters that firms are required to document. These matters are summarized on the slide, but a detailed list is included in paragraph 82. A couple practical considerations that I would like to highlight. First, QC 1000 documentation requirements are principle-based and designed to be scalable. So when deciding on the form, content, and level of documentation, the firm will consider, among other things, the nature and circumstances of the firm and complexity of the matters that are being documented. We have received many documentation questions, very specific, how to document certain quality responses. Would it be sufficient to retain a copy of one email? Do I need to retain 2 emails, retain system logs, etc.? So when determining the appropriate level of QC documentation for any particular quality response, it may be helpful to think about what documentation is necessary to demonstrate that a quality response is operating as intended. Another question that you can ask yourself, would somebody else unfamiliar with the work understand from the documentation how the response works and that it is operated during the reporting period, which is October 1st to September 30th. And the answers to these questions could help you guide, as to the level of documentation, whether it needs to be a brief note or versus detailed narrative. Also the format, for example, if it's a checklist or a memo or screenshot, system logs or copies of emails, as well as the frequency, whether it's a one-time versus monthly. Another practical consideration that I would like to highlight is that firms are not expected to produce and retain additional documentation to demonstrate the operating effectiveness of a quality response for PCAOB inspection purposes. However, even if a firm decides not to monitor a certain quality response within a given year, the firm still will be expected to retain documentation of the operating effectiveness of its quality responses and provide it if it is selected for inspection. As I described on the prior slide, the documentation must be in sufficient detail to enable an experienced auditor to understand the design, implementation, and operation of the firm's QC system. Firms are required to assemble their QC documentation related to a particular QC reporting period ending September 30th for retention no later than December 14th. And this is also referred to as the QC documentation completion date. So the slide illustrates the entire QC cycle from the start of the QC reporting period to the QC documentation completion date. And it also provides references to the applicable requirements in the standard. The firms are required to retain documentation related to the design, implementation, and operation of the QC system and of the annual evaluation of the QC system for 7 years from the QC documentation completion date, unless a longer period is required by law. Okay, so that brings us to our QC implementation page. Just a reminder, it is located on the PCAOB's website. We continue to update it as we develop additional implementation resources. These include knowledge checks, staff presentation of an overview of QC 1000, as well as staff guidance documents covering various aspects of QC 1000 and related amendments to AS 2901. Then we also have staff presentation videos on different components and topics in QC 1000. If you subscribed to PCAOB News, you will get a notification when the page is updated with new resources. So if you haven't already subscribed, now it's a great time to subscribe in the upper hand corner of our QC implementation page. Finally, I know we've covered a lot of material today, so if you have any questions, there is a way to reach us. There is a phone number and the contact form at the bottom of the QC implementation page. With that, thank you for listening and have a great day.